Welcome to the Affordable Care Act Training Session 4, Pay or Play Penalty and Minimum Essential Coverage Reporting, the 6056 reporting on the 1094 and 1095C forms. This ACA training session is for informational purposes only and is not legal advice or a substitute for legal advice. It is designed only for employers that offer the health plan administered by the Georgia Municipal Association on behalf of the Georgia Municipal Employees Benefit System and contains information that is not applicable to other employers. This ACA training session reflects the presenter's understanding of certain requirements of the Affordable Care Act as they existed on January 1st, 2017. Deadlines are those set forth in the law and do not reflect delays authorized by the IRS for a particular year. This ACA training session is not an official document of the health plan. Only the official health plan documents establish the terms of the health plan. GMA has provided a series of Affordable Care Act training sessions. Session 1 was for all employers, entitled Waiting Period Rules, How to Determine Applicable Large Employer Status. Session 2 was just for applicable large employers. It covers pay or play penalty rules. Session 3 is designed for smaller employers, minimum essential coverage reporting, the 6055 reporting on the 1094B and 1095B forms. This session is training session 4, pay or play penalty and minimum essential coverage reporting requirements, the 6056 reporting on the 1094C and 1095C forms. It is for applicable large employers only, and it is essential that applicable large employers have already reviewed Session 1 and Session 2. All of these training sessions are posted on gmanet.com under Life and Health, More Information. The Section 6056 reporting with the C forms includes reporting to the IRS and to the employee. The GMEBS Health Plan is an employer-sponsored, self-insured plan for multiple employers. So all participating employer ALEs must file Forms 1094C and 1095C with Part 3, the minimum essential coverage portion, completed for all enrollees. The GMEBS Health Plan is not a multi-employer plan or a governmental sponsored program. Although these terms seem to apply, a multi-employer plan is a defined term that means a union plan where the plan is governed by a collective bargaining agreement. The term governmental sponsored program refers to Medicare or Medicaid, but not to the GMEBS Health Plan. For reporting purposes, whenever you see in the instructions the term plan sponsor or coverage provider, that means the employer. GMA will not report any coverage to the IRS or to enrollees, and GMA cannot file any forms on behalf of participating employers. The employer has the obligation to file, even if it has very limited interaction with the enrolled individual. It does not matter if the employer is not paying any part of the coverage and is not collecting premiums. The employer must report for all ACA full-time employees, but also must report for everyone enrolled in the GMEBS plan, even if no longer employed. Employers with retirees who are enrolled in the GMEBS retiree-only health plan on a fully self-paid basis still have to file forms for them. However, if these enrolled retirees were not employed during the year, they can be reported using either the B forms or the C forms. The filings are due January 31st of the year after the year of coverage to ACA full-time employees and enrolled individuals, and the last day of February of the year after the year of coverage to IRS, or March 31st if the filing is electronic. In order to complete Forms 1094C and 1095C, the participating employer must figure out whether it will have to pay or play penalties, and that means it's important to look at this well in advance of the actual filing year. That means the employer has to identify all ACA full-time employees, determine the months for which they and their dependents were offered coverage, and determine whether the coverage offered met the affordability requirements. Payroll systems and vendors can help with the creation and even filing of the C-forms. Payroll software is available to create the C-forms. Consider asking your payroll vendor about training. Remember that new information must be entered into the payroll software. Some payroll vendors are filing C-forms on behalf of clients, and there are also some standalone vendors who will work with your existing payroll software to help you create and file the forms. GMA can help a little, but the employer must submit a help wanted certification and request in order to get GMA's help. GMA can help a little. See the certification and request form for applicable large employers that was provided to you by GMA. This form describes the enrollment data files and how GMA will fill out the B forms for non-employees if you request them. If the certification and request form is timely submitted to GMA, GMA can provide the requested data files and/or the B forms by the first week in January of the following year. The employer will have to deliver all forms to ACA full-time employees and enrolled primary responsible individuals by January 31st. Not much time, and file all forms with the IRS by the applicable deadline, last day of February if filing in paper, or March if filing electronically. Applicable large employers must complete the C forms for all active ACA full-time employees, even those not enrolled, and for anyone enrolled as an active employee or his or her dependent during the year. For those who were non-employees, such as COBRA or retirees, and they were never enrolled as an active employee during the year, the ALE must either report the minimum essential coverage on Part 3 of 1095-C or may file the 6055 reporting B forms for these individuals. That information about those B forms is explained in ACA Training Session 3. So an ALE can choose either to use just the C forms for everything or use the C forms and the B forms. Why would an applicable large employer want to complete C and B forms? Well, we're not sure yet, but maybe if it's difficult to put information about someone who was not employed during the year into the payroll system that is generating the C forms, and the ALE prefers for GMA to prepare the B forms so that the ALE can simply mail them. That might be a reason. Another might be if the ALE prefers not to include information about non-employees in its payroll system for other reasons. To learn more about the B forms for non-employees, see Training Session 3. GMA's data files give applicable large employers the flexibility to choose. The 1094-C transmittal form has attached to it the full Social Security number version of all the 1095-C forms. So the employer will send the 1094-C transmittal form and a copy of every individual statement 1095-C form to the IRS. The 1095-C form with the last 4 digits of the Social Security number is provided directly to the ACA full-time employee and each enrolled responsible individual. Although the 1094-C is called a transmittal form, it is not just a transmittal form. In addition to providing information about the employer, including contact information for the IRS to reach with questions, the 1094-C includes a certification of the employer's eligibility for pay or play penalty relief, and it includes a self-report of whether the employer could be hit with a sledgehammer penalty. It also identifies the number of 1095-C forms that are attached. The GMA data files will not include any information needed to fill out the 1094-C form. 1095-C form has 3 parts. In Part 1, there's information about the individual who's getting the form, and there's information about the employer. GMA data files will include Part 1, lines 1 through 6, which has information about the primary responsible individual for enrollees only. GMA does not have information about anyone who is an ACA full-time employee who was not enrolled. Part 2 includes a self-report about whether the employer could be hit with a tack hammer penalty for failing to offer ACA full-time employees minimum essential coverage with minimum value that met affordability requirements. Part 2 is mostly about offer of coverage, and for that reason, GMA does not have most of the information that is needed for Part 2. Only the employer knows who it offered coverage to and what the employee-only cost of coverage was. But in line 16, line 16 does have a code for if the person is enrolled, and the GMA data files will include information about enrollment. Part 3 has a report of enrollment in minimum essential coverage for each month for the primary responsible individual and each enrolled dependent. Part 3 is all about enrollment, and the GMA data files include all information necessary to complete Part 3. If the employer is an ALE, meaning the employer has 50 or more ACA full-time employees and full-time employee equivalents using numbers from the year before the reported year, then reporting is required. See Training Session 1 for how to determine whether you are an applicable large employer. This training session does not address how to complete the C forms if the participating employer is a member of a controlled group. To refresh your memory on controlled group rules, see Training Session 1. This training session does not address how to complete the C forms if the participating employer has formally delegated responsibility for filing to another governmental entity that is part of or related to the participating employer. This training session assumes that the employer is not using any simplified or alternative reporting options. Although there are different options that are called simplified or alternative, they are not as simple as one would hope, and they are outside the scope of this training. This training session assumes that the participating employer does not offer any health coverage other than GMEB's health coverage, and all examples in the training are based on these assumptions. Remember, you only need to complete the 1094C and 1095C forms if you are an applicable large employer. See Training Session 1 for information about how to make this determination. ACA uses special math. The applicable large employer determination is based on information from the year before the year reported. To prepare for filing the 1094C and 1095C forms, you're going to need to identify all employees in each month during 2015. You'll need to identify all employees who were ACA full-time employees for pay or play penalty purposes for each month. Remember, for pay or play penalty purposes, you use measurement periods and stability periods to determine whether a person was an ACA full-time employee. For each ACA full-time employee, determine for which months GMEB's coverage was offered. If you offer coverage to somebody during annual enrollment, that counts as an offer of coverage for each month of the following year, as long as the person was employed in each of those months. If you offered coverage due to new hire or special enrollment, that counts as an offer of coverage for every following month of the year for which the employee could have been enrolled in coverage, as long as employed. If a person declined coverage, and if employment terminates mid-month, he's not considered to have been offered coverage for that final month. For each month, calculate the percentage of ACA full-time employees for which GMEB's coverage was offered. For any month coverage was not offered to an ACA full-time employee and dependent children, determine why no penalty should apply. Some examples: the individual was not employed during that month, or the individual was not an ACA full-time employee during that month, or the individual was in a limited non-assessment period during that month. Finally, you need to identify the cost of employee-only coverage for the cheapest GMEB's option you offer, and you need to identify which affordability safe harbor will be used. For 1094C, we've already completed Part 1, we've completed Part 2, so now it's time to look at Part 3. This is the self-report of whether the employer could be hit with a sledgehammer penalty, and it also identifies the type of pay or play penalty relief that the employer will be entitled to. Let's look at an example. For every month of Year A, Big Happy City has 175 ACA full-time employees as defined in 4980H for play or pay purposes, and 200 total employees. Big Happy City must provide the 1095-C form to these 175 ACA full-time employees. Big Happy City offers GMEBS coverage to 95% or more of its ACA full-time employees in every month of Year A. Henrietta Clerk is the contact for the IRS to reach. This form shows Big Happy City's information in lines 1 through 7. Henrietta Clerk is the person whom the IRS should contact with questions. Do not name anyone at GMA. There is no designated government entity. It doesn't apply, so lines 9 through 16 should be left blank. Over here on line 19, Big Happy City checks yes, the transmittal is authoritative. The city is attaching 175 1095-C forms, so 175 must be entered in Part 1 and Part 2 of the form. The ALE member is not a member of an aggregated group, so no is checked on line 21. And certifications of eligibility do not apply, so all are left blank. Henrietta Clerk signs the form and dates it. This is what Part 3 of Big Happy City's form looks like. When completing column A, the minimum essential coverage offer indicator, this is where Big Happy City tells the IRS that it has offered minimum essential coverage to 95% or more of its ACA full-time employees. So if your city didn't offer it for every single month, you would have to answer it month by month, and there might be penalties associated with the months in which you did not enter yes. You indicate for each month whether you offered at least employee plus dependent children coverage under the GMEBS plan to at least 95% of your full-time employees. When counting, you do not include ACA full-time employees who are in a limited assessment period. In column B, this is where you count the number of 4980H ACA full-time employees. Again, you do not include those who are in the limited non-assessment period. For Big Happy City, that's 175. In column C, you provide the total employee count for the member. When counting employees for this column, add all employees, even part-time employees and those who are in a limited non-assessment period. Use the same time each month, either the first or last days of the month or the first or last days of the first payroll period of the month, as long as that day falls within the calendar month. D should be left blank and E should be left blank. The sledgehammer penalty cannot apply for a month if the ALE offered the GMEBS health plan to 95% or more ACA full-time employees in that month. That's 70% for 2015. For an offer of coverage to count, it must have been available to the ACA full-time employee for every day of the month. If coverage can only start in the middle of the month, it won't count as an offer of coverage for that month. An employer makes an offer of coverage to an employee if it provides the employee an effective opportunity to enroll in the health coverage or to decline that coverage at least once for each plan year. An employer makes an offer of health coverage to an employee for the plan year if it continues the employee's election of coverage from a prior year, but provides the employee an effective opportunity to opt out of the health coverage. That explains why offers of coverage at annual enrollment, even ones where the employee is automatically continued in the coverage as long as the employee had an option to opt out, that's why that offer counts as an offer for all of the remaining year as long as the employee was actually employed. We've looked at Part 1 and Part 2 of 1095C. Now we're going to look at Part 3. GMA data files will include information needed to complete Part 3. (1095C) has John Smith entered here because John Smith is the ACA full-time employee or the primary responsible individual who's enrolled, even if not an ACA full-time employee. For enrolled individuals, the employer could use the GMA data file to complete lines 1 through 6 because GMA data file will include the name and the address of the primary responsible individual who's enrolled. Or the employer could use the information from their payroll systems. Lines 7, 8, 9, and 11 through 13, you use the same information that was entered on Form 1094C. This is information about the employer, and it should match exactly with what was on the transmittal form. But line 10, the contact information could be different from the contact on 1094C. This is the individual who will get calls with questions from the individuals who get the form. Like with the transmittal form, it's not going to be anybody at GMA, but it may be an employer wants to have a different contact for the IRS than it does for the form that goes to the individuals. We will look at several examples involving John Smith. First, let's look at the blank 1095C form, Part 2. Over here, the planned start month is always January 01 for the GMEBS health plan. In line number 14, remember you can never leave it blank. You're going to fill in line 14 with a code, and we'll talk about that in a minute. It will describe what kind of offer of coverage, if any, was made. Line 15, you will fill in what you charge for employee-only version of the lowest cost of GMEBS option you offer. It may be that you charge nothing, but this is where you will enter what you charge the employee. Line 16 is where you enter a code that gives the reason why you meet the affordability requirements using code series 2. That's where you're proving that you should not be hit with a tack hammer penalty. Lines 15 and 16 will be blank if you did not offer coverage for that month or if the individual was not an ACA full-time employee for any month of the year. On 1095C form Part 2, in line 14, we'll use the code series 1 to tell the IRS whether you offered GMEBS coverage for the month. If you did offer GMEBS coverage to everyone in the family, you enter code 1E. Everyone in the family was offered coverage. The person receiving the form will read on the back, minimum essential coverage providing minimum value was offered to you and minimum essential coverage was offered to your dependents and spouse. If you only offered coverage to the individual but not their dependents, you would use code 1B, but not dependents. Minimum essential coverage providing minimum value was offered to you and minimum essential coverage not offered to your spouse or dependents. Before entering 1B anywhere, discuss with counsel. There's a penalty risk if the employer does not offer coverage for dependent children. If you did not offer GMEBS coverage for the month, you enter code 1H. I like to remember, heck no. Coverage was not offered. No offer of coverage. You are not offered any health coverage, or you are offered coverage that is not minimum essential coverage. If you did not offer GMEBS coverage for every day of the month, you enter code 1H. Heck no. Coverage was not offered for every day. This means you were not offered health coverage for every day of the month, or you are offered coverage that is not minimum essential coverage. See examples 3 and 7. When you have an offer of COBRA to a former employee, somebody who terminated employment, you enter code 1H. You'd also enter 1H if you offered retiree coverage to the individual for that month. If you offered COBRA but the employee is still employed, for example, the individual is no longer a full-time employee and lost eligibility but is still working for you, you would enter code 1E if COBRA coverage was offered to everyone in the family, or code 1B but not dependents if COBRA was offered only to the employee. Employees who were not ACA full-time employees for any month of the year, but who actually enrolled in GMEBS coverage at some point during the year, have a special code. So some examples of these types of individuals would be non-ACA full-time employees who are eligible to be in the plan because of their statutory position, such as an elected member of the city's governing authority, retirees, COBRA former employees, and COBRA beneficiaries who made a separate COBRA election. These are individuals who are not employees of the employer, but are still eligible to be in GMEBS coverage in some cases. If you have somebody like that who was not an employee at any point during the year, you're going to enter code 1G. That says you were not a full-time employee for any month of the calendar year, but you were enrolled in self-insured employer-sponsored coverage for 1 or more months. That has to be entered in the all 12 months box on line 14. If you enter code 1G, the rest of part 2 is left blank. Just a reminder, GMA cannot advise whether any individual is an ACA full-time employee. There are several other codes in Code Series 1 that do not apply. Codes 1A and 1I relate to alternative reporting, which is beyond the scope of this presentation. Code 1C does not apply because GMEBS eligibility rules do not permit participating employers to offer coverage only to employees and dependent children. Code 1D does not apply because GMEBS eligibility rules do not permit participating employers to offer coverage only to employees and spouses. Code 1F doesn't apply because GMEBS coverage is minimum essential coverage that provides minimum value. And codes 1J and 1K do not apply because the GMEBS eligibility rules do not permit a conditional offer of coverage to the spouse. So you can just ignore these codes. On line 15, this is where the employer tells the IRS whether the employee received an offer of coverage that was affordable as defined by ACA. And as you recall from training session 2, affordable only looks at the cost of the employee-only coverage. So the form instructs you to enter the employee share of the lowest cost monthly premium for self-only minimum value coverage. So all GMEBS options are minimum value. So enter 0.00 if you offer employee-only GMEBS coverage at no cost, or enter the employee's cost for employee-only coverage under your cheapest GMEBS option. Leave this blank if no offer was made for the month. The form will tell the recipient this line reports the employee share of the lowest cost monthly premium for minimum essential coverage providing minimum value that your employer offered you. The amount reported on line 15 may not be the amount you paid for coverage if, for example, you chose to enroll in more expensive coverage, such as family coverage. GMA cannot provide any information about the cost that individuals paid for coverage. It is the employer's who has the information about what they actually charge the employee. 1095C Part 2, line 16 tells the IRS why no penalties should apply. Always remember, CADs go first. Code 2C says the employee was actually covered for each day of the month. No penalties can apply if the employee is actually covered. Enter 2C even if another code fits, but do not use 2C for COBRA coverage due to termination of employment. Code 2A tells the IRS the employee was not employed on any day of the month. Use 2A if the person is enrolled in COBRA or retiree coverage due to former employment. Use Code 2D if the employee was in a limited non-assessment period or in an initial measurement period during the month. On 1095C form, line 16, you would enter Code 2B only if 2C, 2A, and 2D don't apply, and one of the following is true. The employee was found not to be an ACA full-time employee, or if the mid-month termination rule applies, where the employee was an ACA full-time employee who declined enrollment and ended employment in the middle of the month, or was an enrolled ACA full-time employee but coverage ended mid-month due to termination of employment. Or, for the month of January 2015 only, ACA affordable coverage was offered no later than the first day of the first payroll period of January 2015. Or, if the person is an active employee who enrolls in COBRA mid-year due to a reduction in hours, then you would use 2B, because he's not found not to be a full-time employee. Codes 2F through 2H. These codes prove that the offer of coverage was affordable under a safe harbor. And you need to enter the code that goes with the affordability safe harbor you used. 2F is the W-2 safe harbor, 2G is the federal poverty line safe harbor, and 2H is the rate of pay. Code 2E is not applicable because it relates to union plans. What if there is no Code Series 2 code that applies? Well, that means there is no excuse for failure to offer coverage that meets the affordability requirements for that month. That means the tack hammer penalty will apply if the individual gets subsidized coverage on the exchange for that month. For more information about the penalty, see ACA Training Session 2. If no line 16 code applies, check with an advisor to make sure you are aware of the consequences. We're about to discuss a series of examples of different situations and how Part 2 of 1095C will be completed to report that information. You may want to pause the program at this point and print out these sample slides so that you can look at them while the presentation is going on. Example 1. John Smith is an ACA full-time employee for the 2015 stability period. At annual enrollment in 2014, he was offered employee-only and family coverage, but he chose employee-only coverage. He was enrolled all 12 months of 2015. In line 14, 1E is entered because during annual enrollment, everyone in the family was offered coverage for all 12 months, even though John did not enroll dependents. In line 15, the 0 was entered because the lowest cost monthly premium for employee-only coverage was 0. In line 16, the code 2C was entered because there was no tack hammer penalty when the employee was actually covered. In example 2, John Smith terminates employment on July 5th and coverage ends July 31st. John does not enroll in COBRA. In line 14, 1E is entered for January all the way through July because for the same reasons we discussed before. But for August through December, when he is no longer an employee, 1H, heck, no coverage was offered for those months. In line 15, 0 is entered for the cost of the coverage that was offered from January through July, but it's left blank for August through December. When there's no offer of coverage, you do not include the cost of any coverage. For line 16, 2C, actually covered, is entered for January all the way through July, and then 2A is entered for August through December because he was not employed on any day of the month for August through December. Bob terminates employment May 31st, and self-only coverage ends the same day. He enrolls in self-only COBRA for the rest of the year. You see that in line 14, the annual enrollment offer to his employee and family counts as an offer for months of actual employment or enrollment due to active employment. So 1E is entered. Everyone in the family is offered coverage for January through May. Even though Bob actually enrolled in COBRA, for Part 2, enter 1H, no offer of coverage for June through December. You always leave line 15 blank when line 14 is 1H. 2A is entered in line 16. No tack hammer penalty because he was not employed on any of those days. In example 3, John was hired January 5th and enrolled on March 1st after the waiting period. For January and February, line 14 says 1H, heck, no offer of coverage for January and February because of the waiting period. The new hire offer of enrollment was for everyone. Everyone in the family was offered coverage, and that was effective from March all the way through December because that was the earliest he could have enrolled in that coverage. In line 15, it's blank for January and February because there was no offer of coverage, and the lowest cost of employee-only coverage for March through December was 0. Line 16, 2D is entered for January and February. There's no tack hammer penalty because John was in a limited non-assessment period in January and February. For the rest of the year, John was 2C covered. In example 4, John chose family coverage. You'll note that part 2 of the form looks the same as example 1 because for purposes of part 2, it doesn't matter whether dependents actually enroll. What if Big Happy City charges $75 for employee-only coverage? Well, if John Smith still enrolls, there's no need to explain why $75 meets an affordability safe harbor. Line 16 is entered with 2C. And in line 15, the lowest cost of the employee-only coverage, $75, is entered. What if Big Happy City charges $75 for employee-only coverage and John does not enroll? Well, in that case, Big Happy City does have to explain that the cost of coverage at $75 is affordable. By entering 2G, Big Happy City is telling the IRS that the tack hammer penalty won't apply because $75 for employee-only coverage meets the federal poverty line safe harbor. For more about safe harbor, see Training Session 2, slide 45. Remember, 1E is entered because everyone was offered coverage for all 12 months, even though John declined. In example 7, John did not enroll and he leaves employment in the middle of the month. For a mid-month termination of employment for an ACA full-time employee who is not enrolled in coverage, there's a special code. Since John terminated employment in the middle of July, the offer of coverage during annual enrollment does not count as an offer for that month. So 1H is offered for July. Since John was actually employed for part of July, 2B has to be entered on line 16 to show why no tack hammer penalty should apply. 2A, not employed on any day of the month, is used for the rest of the year. Claudia Counterpoint is a council member. Big Happy City determined she is not an ACA full-time employee for 2015. She was eligible for GMEBS coverage due to her status as a member of the governing authority. She was not re-elected, so her coverage terminated on March 31st, and she did not elect COBRA. Because she was not an ACA full-time employee in any month of the year, Big Happy City enters 1G in line 14 and leaves lines 15 and 16 blank. Big Happy City must complete the 1095C form because Claudine Counterpoint was an active employee during the year. And we'll discuss part 3 later on in the program. Example 9, Raphael retiree has been retired from Big Happy City for years. He received an immediate BHC retirement annuity and enrolled in the GMEBS retiree-only health plan. He pays the entire cost of coverage. He was enrolled for all 12 months. The information for lines 1 through 6 is provided on the GMA non-employees data file. In line 14, 1G is entered. Because Raphael was not an ACA full-time employee in any month of the year, Big Happy City enters 1G and leaves lines 15 and 16 blank. Unlike Claudine Counterpoint, Big Happy City could have chosen not to file C forms for Raphael and instead have filed B forms that were prepared by GMA, because Raphael was not enrolled as an active employee during the year. The offer of family coverage at annual enrollment only counts for Ralph while he was employed. So 1E is entered for Ralph for January through May. Ralph's active employment ends May 31st when he retires. He enrolls his family in the retiree-only plan. Assuming that retiree coverage is treated the same as COBRA coverage, 1H is entered for June through December. 2A is entered in line 16 because he was not employed on any day of those months. What if Ralph's dependents elect COBRA instead of becoming enrolled in the retiree-only health plan? Well, Big Happy City must file a separate Form 1095C for Ralph's wife, Jane, because she elected COBRA for herself and their son. At this point, there's no clear guidance about what to report in Part 2, only that the spouse must receive a separate Form 1095B or 1095C reporting her as enrolled. 1G might be appropriate, or it might be appropriate to leave Part 2 blank. Part 3, Proof of Minimum Essential Coverage. This part of the form tells the IRS and the primary responsible individual which months the primary responsible individual and his or her dependents had minimum essential coverage. Remember, anyone who was actually enrolled in GMEBS coverage for a month cannot trigger a pay-or-play penalty for that month. Anyone who is actually enrolled in GMEBS coverage for a month cannot be penalized by the IRS for failure to have minimum essential coverage for that month. GMA data files will provide information needed to complete Part 3. A participating employer must complete Part 3 for any person who was enrolled and who was an employee or a dependent of an active employee. If an employee is covered as a dependent spouse or child of another employee, Part 3 should be completed only on the Form 1095C for the employee who enrolled the dependent. Let's take a closer look at the GMA data files that will be provided if the employer submits the certification request for help. GMA's active file will provide all this information about the primary responsible individual. This is the primary responsible individual who is flagged as an active employee during the year at any point during the year, or flagged as a dependent of an active employee who selected independent COBRA coverage during the year. GMA will also provide a non-employees file. That file reports information where the primary responsible individual is not flagged as being an active employee at any time during the year. The data elements are exactly the same. Let's look at some examples for 1095-C Part 3. This is how you complete 1095-C Part 3 when there's an ACA full-time employee who is not enrolled in any month. Big Happy City charges $75 for employee-only coverage, and John does not enroll. You'll remember this is example 6. Down here, under covered individuals, this entire section in Part 3 is left blank. If the ACA full-time employee did not enroll, leave Part 3 blank, do not check any boxes. And remember, there won't be any information about this person in the GMA data files. From example 1, John was enrolled all 12 months. When that is the case, this checkbox is completed and all 12 months is checked here. The GMA active data file will show coverage for all 12 months. From example 2, when there's a full-time employee is enrolled as an active employee for part of the year and then employment is terminated, you simply check the box and then check the box for each month in which the person was covered. That information will also come from the GMA active data file. Bob Smith terminates employment May 31st and coverage ends May 31st. Bob and family are enrolled in COBRA for the rest of the year. You'll see the GMA active data file will show coverage for all 12 months. In example 4, John chose family coverage. He and his wife were enrolled all 12 months. Newborn Smith's Social Security number was not available, so the date of birth is used when reporting her coverage. Part 2, as we said before, is exactly the same as when he just selected employee-only coverage, but Part 3 is different because it shows coverage for dependents. John was covered all 12 months, his wife Mary was covered all 12 months, but Newborn Smith was covered only for October through December because he was born on October 1st. The date of birth is used because the Social Security number is not yet available. This shows Claudia Counterpoint's Part 3 of the 1095-C. The GMA active data file will provide the information necessary for Part 3 because Claudia Counterpoint is flagged in the GMA system as enrolled due to active employment during the year. Raphael Retiree's Part 3 of the 1095-C will contain information from the GMA non-employees data file. The non-employees data file will also provide the employee information in lines 1 through 6, which the employer may not have as up to date because the employer is not regularly interacting with Raphael Retiree. The reason it will come from the non-employees data file is because Raphael was enrolled but never flagged as enrolled due to active employment during the year. For this example 10 for Part 3, we have somebody who's enrolled as an active employee with family coverage part of the year and then enrolled as a retiree with family coverage part of the year. The GMA active data file will provide information for lines 1 through 6 and for Part 3 because Ralph and his dependents were flagged as enrolled due to Ralph's active employment during January to March. You'll see that Ralph and his spouse and child all had coverage for all 12 months. What if dependents separately elected COBRA for part of the year? Well, as we discussed before, Big Happy City must file a separate Form 1095-C for Ralph's wife, Jane, because she elected COBRA for herself and their son after Ralph retired. The GMA active data file will provide employee information for lines 1 through 6 and will provide information for Part 3 because Jane and Henry were flagged as enrolled due to Ralph's active employment for part of the year. You'll see this is the separate 1095-C that should go to the wife, and it shows coverage due to her independent COBRA election for April through December. How are 1094-C and 1095-C filed with the IRS and delivered to ACA full-time employees and the enrolled primary responsible individuals? The employer completes 1095-C form 2 times. The IRS gets a copy of the 1095-C with the full Social Security numbers. The ACA full-time employees and enrolled primary responsible individuals get a copy of the 1095-C with only the last 4 digits of the Social Security number. The 1095-C goes to the individual identified in lines 1 through 6, even if the enrolled dependents live at a different address. A dependent who made a separate COBRA election will have his or her own 1095-C form with the address listed in lines 1 through 6. The employer may provide the exact same form to both the IRS and the individual with the full Social Security number, but this may not be advisable due to security concerns. The employer must file all 1095-C statements with a full Social Security number along with the 1094-C transmittal form to the IRS. All employers may file electronically with the IRS. Only employers filing fewer than 250 forms may file by mail. For the 2015 tax year, the deadline was extended to May 31st, 2016 for filing by mail, or June 30th, 2016, electronic filing. The general deadline for filing is February 28th of the year following the year being reported, or March 31st if filing electronically. In general, the 1095-C form must be mailed by first-class mail to the last known permanent address, or if none is known, to the temporary address of the responsible individual. Electronic delivery is permitted, but you have to follow consent rules, and that is a big hassle. For the 2015 tax year, the deadline was extended to March 31st, 2016. In general, the deadline is January 31st of the year following the year being reported. Note that is before the deadline for filing with IRS. For active employees only, the statement may be hand-delivered in accordance with W-2 delivery rules. For retirees, COBRA enrollees, individuals who are ACA full-time employees or enrolled during the year but are not active employees at the time of delivery, the only acceptable methods are first-class mail to the last known permanent address or electronic if the consent rules are followed. For active employees who are active at the time of delivery, the only acceptable methods are mail or hand delivery or electronic if those consent rules are followed. There are penalties for failure to file these forms. If the employer intentionally disregards the reporting rules, the penalty is $500 per form with no annual cap or reductions for correction. Otherwise, it's $250 per late, missing, incorrect, or incomplete form, with reductions to $50 per form if it's corrected in 30 days, or $100 per form if corrected by August 1st, with a yearly cap of $3 million, or $1 million if the employer has less than $5 million in gross receipts. All of these numbers are for the 2015 tax year. Every year after that, they are indexed for inflation and vary. For example, for the 2017 filing of the 2016 tax year, the per form penalty is $260. Penalties for failure to file the forms are separate from the sledgehammer and tackhammer pay or play penalties. Keep careful records. Records of your eligibility for the 50 to 99 one-year delay, identification of ACA full-time employees, proof of limited assessment periods, initial measurement periods, proof that enrollment documents were provided, and proof of satisfaction of affordability safe harbors. Thank you very much for your time, and please feel free to contact me if you have questions about this presentation.